Brian, great to see you again. Today, we're going to cover some of the most common questions, concerns I get from entrepreneurs and investors. You and I first met almost 10 years ago through a mutual friend in Taiwan. And really the reason I wanted to get your advice, your S3 Ventures is one of the most tenured in Texas. No one knows the Texas landscape like you guys. So I wanted you to share your story a bit, how you got to where you're at in the S3 Ventures story.
Yeah, love to. Thanks for having me, Chris. So just to back up a little bit, I grew up in Southwestern Ohio, was interested in engineering. So I went to undergraduate engineering school at the University of Cincinnati and co-op with IBM, which is a key part of my story. And then went straight to grad school in electrical engineering as well. And then went back to work for IBM in New York State. I spent some time there in the late 80s, early 90s. And then after a project I worked on there had kind of finished and transferred, there were a bunch of folks coming to Austin. So I came to Austin with IBM in 1992 and spent about 3 years working here in Austin on a new technology that IBM ended up walking away from for a season. And so I left in 94 and did a startup here in town. And that was a super fun thing to do in the enterprise data center. So two of us originally grew up to 250 people. We built it into a public company and went public in 99. That was an amazing journey for a 34-year-old to run a public company, and ran it for the better part of the next 4 years. And in the background, I was doing some angel investing in other entrepreneurs here in Austin and in Texas in between 2000 and 2004. So after I left the public company in 2003, I kind of took that 2004 off, hung out, had a thesis that Texas was going to be a great place to invest, and started that in 2005 with our still current investor. We have a single LP model, had a lot of success over the last 17 years. So I've been building a venture firm now for longer than the other two roles.
That's fantastic. Closing in on almost 1 billion in assets. How are you all going to celebrate once you hit the 1 billion mark?
Well, we're going to probably have some cake, and then we're going to keep on investing. So we're excited, building a great team here, and they're just doing a great job.
That's incredible. You really had the vision 17 years ago. What so many are just now seeing, VCs, Fortune 50s, like the incredible business potential in Texas. Everyone's getting on board now. So what was it that captured your attention, your dreams to stay so laser focused on Texas-based companies?
Well, first of all, Texas and Austin were so good to me in those early years that I wanted to give back. And the thesis originally was that investing locally could produce a couple of 5Xers or better per year. The history kind of showed that. I did some research. It showed that there were, for Series A investors, some 5X returns. And that I thought with my operating experience, I might be able to help a third one out annually to get into that category. And so those early years was a lot of that, figuring that out. And of course, as you know, tons of folks have moved here over time because it's a great place to live and work. We have good weather, no state income tax. There's fun stuff to do here. And so it's just grown, that opportunity has grown over the years.
It really has, yeah. So what do you feel like Texas is doing right overall to continue to attract startups and investment here? You mentioned no state income tax and lower cost of living. It's going up. I think it's crazy right now.
Going up a lot. Austin's definitely booming for sure. And Texas is as a whole growing as well. But, I think that we're very collaborative here. I think it's a inviting place to work. I think the investors are working together more than they are in other places. And so that's certainly a helpful thing. And I think entrepreneurs are getting together and figuring out how to, encourage one another.
That's great. That's great. Where's Texas not doing so well? Where do you hope Texas will be in the next 17 years?
Well, it's number one, I want to keep seeing the talent grow. And so we see a number of folks who've worked at bigger companies, kind of like I worked at IBM, saw big problems, and they're now spinning out doing startups. So I just think as that continues, that'll be good. That just takes time for the folks who are here working at the bigger companies to spin out and do their thing. We got to keep the state, tax thing as it is. So there are those kind of things. We need to continue to work on mobility here, make it easy for people to get around. I think we've had a kind of a gift with the quality of Zoom. Honestly, you can do things in a hybrid way, but we still got to have places for people to get together and build businesses.
Absolutely. What's been the most surprising change? I mean, you've seen this for 17 years. What's been the most surprising change over those 17 years in Texas?
The level and quantity of talent coming to Texas is amazing. And that's a real gift for the economy. It's a gift for those who want to work in these kind of smaller businesses. So that's been the biggest thing I've seen. Of course, we've had a lot of new influx in capital, but still a number of those folks are national in their focus, whereas we're still focused primarily on the state of Texas.
That's great. You've weathered all kinds of downturns and volatility as well. What's in the forecast? What are you forecasting for this next season? And how can entrepreneurs prepare for this next season?
Yeah, gosh, Chris, it's going to be bumpy. I have you'll hear my euphemisms along the way, but it's definitely going to be bumpy.
It's gonna be bumpy.
I think, number one, you got to get financed, and things were very, very, valuation rich in the last couple of years. I think that's coming down. I think that entrepreneurs need to be careful on their spend. They need to be focused on what they're trying to do, which is product market fit, understand the unit economics, figure out how to sell to their customers. Those are the key things, and be very, very focused on those things. And then, I would say work with your customers and figure out how to make what you're doing better. It's amazing. They will always tell you what they want, which is great. So ask them.
Ask them. So what signposts are making you more hopeful? I mean, there's a lot of, the news keeps changing every week, but what signposts are making you hopeful?
Yeah, I would say a couple things. One, this will be at least my third, if not fourth cycle that we're kind of heading into. And so the beautiful thing is cycles happen and they resolve. Yep. And so I think what encourages me is that they resolve. I think the second thing is that people are very resilient and they'll get through it. And the good things, can and will survive. And so I'm encouraged by the stick-to-itiveness of entrepreneurs.
That's great. Are there any other signals that are keeping you up at night? Like in particular, is inflation or anything keeping you up at night?
Yeah, I actually sleep pretty well myself, but in general, inflation is going to be tough. And, unfortunately, it really disproportionately affects the poor, which I hate, but that's kind of the reality. And, we've had 40 really good years, Chris. So I'm disappointed that the government kind of has botched that one when it was really kind of a good run. So we keep taxes low. If we keep, working on these problems, I think it'll get a lot better. But it's going to be bumpy for a while.
Yeah, absolutely.
Mm-hmm.
There are really mountains of, there's all kinds of books and coaches and tools at every phase of growth. How do you coach your founders to weed through all that noise? There's so much coming at them all the time, especially around advice at every phase of growth. How do you help them get through the noise?
Yeah, no, that's true. There's a lot out there to consume. And so, I would say number one, we've got some resources on our website and some reviews of books that can be helpful to check out. I like the book Disciplined Entrepreneurship because it goes through all the different things that are about making and building a company. I like the Benioff book on cloud. There's some good stuff in there. And then, of course, Peter Thiel's book, 0 to 1, really talks about how to think about something in a transformative way and really go from it's never been done before to this is our new thing. So those are some assets out there I would spend, my focus on. And again, like I said, we've got some resources on the website.
Got it. S3VC.com. Don't forget that. We'll say that a few times before the end.
Yeah.
Who's mentored you over the years? What are some of the best pieces of advice from your mentors?
I had a great first manager at IBM who really showed me that it was okay to avoid the hierarchy and to meet with people that were 4 levels above you. And he took me to lunch one day with the plant manager. And that was just for me, a 25-year-old kid, and an amazing experience. And so it really showed me not to have to be a respecter of persons, but everyone should be, we'd be able to engage with them would be number one. And then another guy, Jack Losey, was a financial mentor for me along the way. And Jack taught me how to think about business and understand the real root cause of how things work. And he taught me how to use waterfall charts. And so just the simple basics of that, those of how to know and viscerally get a feel for your business came from some of those guys.
That's great. You still use that advice today, you think?
Oh yeah. In fact, we make pretty much all of our companies use waterfall charts. We make them use the tools that help them understand their business. I encourage them to, when we're looking for a board member, who in the planet could make this company better? And let's go talk to those people. And surprisingly, in most cases, they will talk to you. And that's awesome.
Great. That's awesome.
Yeah.
Can you share your best overall investment to date? The one in the last 17 years, are you allowed to share your best?
Well, I'd love to. I mean, they've all had a special place,
Sure.
Especially the ones at work. But the one that's probably the most fun for me right now is Alchemy, which I led the Series A in 2011 and still serve as chairman. Company went public last year. It's a great team. Alex Shootman doing a great job leading the company. The senior team is amazing, and I'm learning, from them all the time. So I'm really enjoying it.
What about that one investment that just got away? Is in the last 17 years, the one that, man, I should have gotten that one. What's the one that got away?
Oh, being an electrical engineer, this one is the one that hurts the most. It's a company here in Austin called Infinitum, and they are literally going to transform the way electric motors are made by taking all the copper out of a stator and dropping weight, no liability, no kind of issue with sparking in motors so you take away risk there. And just a great company led by a guy named Ben Schuler. It's going to be a big capital deal, Chris, and probably not one that really fit our, target, but It just aches my soul that as an engineer, I couldn't have been in that one.
Okay. Yes. Yeah. We'll keep an eye on them.
Yeah.
What are your thoughts on all these new models of fundraising, alternate finance and crowdfunding? I mean, it's a huge topic, but I mean, it's changed a lot. What are your thoughts?
Sure. Well, there are lots of ways to fund businesses, as you know, and there are lots of appropriate ways to fund businesses. And we're obviously in the niche of venture capital. That's typically oriented toward a certain kind of business. And also a lot of VCs come with advice, with experiences, with a network of people that they've recruited. So if that's kind of fits your sweet spot, then that's a good place to work. If you want to just do it yourself and crowdfund it, and you got all the smarts yourself, then go do it. That's a great way to go. So I would say make sure that what you're building fits the modality of the way you want to finance it.
Right. Mm-hmm. What are the biggest mistakes you see founders often make in that seed stage to Series A? What are the most common mistakes you see happen? The early growth.
Talking to customers. What do they want? What do they need? Figuring that product market fit out. What are they buying? Why are they buying it? Am I pricing it correctly? Those classic things that we talk about in marketing are really things that get botched. And I would say, just as a broad scope, Chris, listening is the hardest skill in asking good questions. And then honestly, doing what people tell you to do.
Yeah. Asking the right questions.
Yeah.
One of the bigger concerns I hear from founders is around dilution and potentially losing control at some stage of growth. How do you speak to those concerns around dilution?
Yeah. Number one, you got to find a partner you can work with. And so even independent of what the dilution is going to look like, you're going to have some hard times. And so make sure that this is a group, a set of individuals that you can really, work well with. Number two, I think you have to be honest and say, and we always like to say it, do I want to be king or do I want to be rich? And that's the distinction. If you want to be king, then you can go do what you want. But if you want to be rich, you got to bring other people along. Sure. And so just make sure you pick them well and that you can just make sure you can work well together. And that's something that we spend a lot of time on the front end of the process, showing our entrepreneurs, connecting them with our CEOs so they can get an understanding of what it's like to work with us. Because I want them to be clear on that on the front end.
Yeah, absolutely. The other big concern I hear is around talent. How do you find the right talent? How do you keep the right talent? I see all kinds of early stage teams hiring only family members, hiring only people they've worked with before, hire too fast, hire too slow. How do you speak to those common hiring retention mistakes that early teams make?
Yeah, it's good because you got this balance of, hey, I trust these people that I know. Versus, I've got these individuals who may have greater skill sets, but I don't really know them or trust them. So it's a little bit of step of faith there. I think that's why we like to refer CEOs to our other CEOs so they get to know who we are, how we work. And, I would encourage them, the key thing is you want to be bringing in people who make the company better. And don't be afraid to hire people that are a lot more capable than you are. I mean, early in my days at Crossroads, I had a lot of folks on my executive team who just knew more than I did. And so I just learned a ton from them. So I'd say hire above your skill sets always and try to make the company better with every hire. That's
great. That's really, really helpful.
Mm-hmm.
And you're a family man. So how do you coach young families trying to start a business, balance, burnout? How do you speak to those challenges? Is balance even possible with a startup that you really put your heart and soul into?
It's such a great question. So a key advantage, as you can imagine, of startups is their speed and the hard work. And so that's an unfair advantage that they have, along with the smart ideas and the way to talk to customers. But sometimes life is going to get out of balance. It just is. I remember a time when my wife came to me and during the startup and said, "You have to quit." And so I got these 3 kids. And so you're going to have those moments. And so I think you can do it. You can be out of balance for maybe weeks or months at a time, but you can't really do it for years. And so you got to find someone, maybe your spouse, partner, that's walking along with you saying, "Hey, let's agree to what this looks like," and kind of keep accountable to that. Yeah. But it's going to get out of balance at times, for sure.
Yeah, it is. So I'm sure you've heard the quote, when you get to the top of the ladder, you may find it's been propped against the wrong wall. You've been at this a long time. How do you counsel founders to not prop their life ladder against the wrong building?
Yeah, a lot of what we've been talking about today is asking good questions. Mm-hmm. And so I think you have to ask the question, where is my identity? Yeah. If I'm honest with myself, why am I doing this? Or who am I doing this for? And is the outcome only for financial benefit? Right. If it is, I think, Chris, it'll be unsatisfying. And, we've all heard this statement that, it's not the end point, it's the journey. So you kind of start with the end in mind, look at the journey. Is it satisfying to the people in my life and to me, along the way? Yeah. And if it's only from, one thing I've learned over time is that money amplifies character. And so whoever you are today, money will just amplify that. So if you're successful on the financial side, it's just going to amplify that. And do you want that to be amplified? And so I think about those things as you enter the adventure. Who's going along with you? Who's accountable? Yeah. And for our family, we care about eternal things. We care about things that live beyond Brian. Yeah. And so we're going to do our best to follow, in our case, what Jesus taught. And we're going to care about others, and we're going to root for and support the widow and the orphan, kind of the underprivileged in our societies. Yeah. And so we want to make them lift them up. Yeah. And I think I love what Jesus said, and we want to make His words known to the nations.
Yeah. I love it. Well, thank you so much for sharing your time and insights, Brian, on all of this. It's been a great conversation. Those listening, I hope it's been valuable. You can always jump in and share comments, s3vc.com or kwwatson.com. And of course, we're both online and LinkedIn. Thank you again for taking the time. Look forward to talking more.
Yeah, Chris, thank you, friend.